Hi, Mark, here, Tuesday, March the 31st. It's noon Eastern Time. And I think a very relevant time to analyze and have a look at where we stand 1 month into the Middle East conflict and to look at what we do know. And of course, as traders, looking forward, what we can expect and what we can prepare ourselves for. Starting point is US dollar index. And I've got up here today's chart, the daily chart, and you see this red candlestick. That's a bearish engulfing candlestick. If it continues, uh, the red continues and closes maybe even lower, or at least ends the day engulfing the previous green candlestick, that is a strong reversal sign. Right now, we have, and we've had since the start of the conflict, strong US dollar. Will that continue, or perhaps a reversal, perhaps a turnaround? Let's have a look. Here we are, 4 weeks in. The immediate reaction to the conflict, to the war, to US-Israel attack on Iran on the 27th of February, I think the political military response expected. Of course, Iran was going to retaliate. I think what's unexpected is the shock of oil and the geopolitical regional conflict that followed. That, I believe, was unexpected, which has led to inflation fears, potential global growth slowdown, and risk of sentiment throughout the financial markets. The US dollar as the safe haven asset is what we have seen. It offers higher yields. The treasury bonds serve liquidity and safety, and I think it's all about liquidity right now. And the rally in response to the oil spike, coupled with the hawkish Fed meeting on the 18th of March, where even though rates were kept on hold, certainly a hawkish tone, have all added to this US dollar rally. And equities have come down with the risk sell-off theme. What could trigger a reversal from strong to weak US dollar? A de-escalation of the conflict, oil prices coming down, the Fed turning dovish, global growth stabilizing. All of them, uh, one or two of these factors would contribute to strong dollar turning to weak dollar, or at least a sizable retracement, if not a full reversal. Reasons why the US dollar would continue to strengthen, the war continuing, even escalating, high oil prices and spikes in the oil price like we've seen, all leading to inflation concerns. The Fed remains hawkish, takes cuts off the table, doesn't talk about rate cuts, and global growth continues to look weak and uncertain. A strong indicator of which way this will go is the situation we see, the Straits of Hormuz, which controlled by Iran and have been since the start of the war and remain closed. Certainly will give us an indication of which way we can expect, be it US dollar strength to continue, maintain, or possibly turn the other way and uh, reverse from strong to weak. Oil has been the major driver. The currency is affected through energy prices rising and the US dollar strengthening. The 100 plus price on oil kind of has become the norm. It is a supply and demand dynamic we see. The relationship oil and US dollar impact, higher oil equals inflation fears. That's what we're seeing, leading to higher interest rate expectations, what we're seeing, all positive for the US dollar. Worth noting is the US dollar gold, um, the way they've reacted. Both are assets as safe havens. However, the market suggests that the priority has been the liquidity which the dollar offers over traditional hedges. So those are some of the facts I think that we know uh, about, about where we stand right now, what we've seen with the particularly the US dollar and the way the currencies, the US dollar strengthened against all of the majors. Let's have a look at, go back to where I started. So there's the US dollar index. And the US dollar index, you can see shaping up so far today, could turn around, of course, but shaping up to be a reversal day. This bearish engulfing candlestick, which it is right now, if that maintains, is certainly a strong reversal sign. If this does continue, I've measured the from the low to the high. Fib retracement tool, the first real test would be the 38.2, and that's at 98.55. So that would be, I think, where the real test comes in as to whether this is a retracement or perhaps a full-on reversal, which could move a lot lower. Let's have a look at those majors. The euro against the US. There we go. We know strong US dollar, we've seen that, but here's the potential turnaround today. There's that strong green candlestick so far, still a long way to go, the whole afternoon portion of the US session. But going into it, we're seeing a green candlestick could close higher than yesterday's low, which would certainly be bullish. And if the euro does strengthen against the US, closes higher today, could be the start of the turnaround that could possibly happen, bearing in mind the bearish engulfing candle we saw on the US dollar index. Measuring high to low for retracement level, the first real test here, the 38.2%, that sits at 116.65, the first real test on the upside. Pound against the US. Pound struggling. It was a green candlestick, pretty solid, the same as we saw the euro earlier, but unable to maintain, or US dollar is recouping all of those earlier losses. But again, we'll see if US dollar does turn, or we see a reversal from strong to weak, would be reflected as well in the pound. We'd have to see this green candlestick come up, close higher than the previous candlestick. And here, when I measured the high to low, the retracement tool, to see the first real test on the upside, the 38.2%, sits for now a lot higher at 134.23, a relevant level to watch for. And then the US against the yen. For me, this has been the precursor. This gave us the early heads up, even yesterday, of a potential reversal from strong to weak US dollar. There you see, yesterday we had a bearish engulfing candle, like the one that's forming at the moment on the US dollar index. But this one did finish the day lower, higher and lower than the previous day, and was accurate because it's followed through today. 2 consecutive days of the yen strengthening against the US dollar giving up gains. We'll see whether that does continue. EMAs have already crossed to the downside. Measuring low to high, the first 38.2% level here sits at 156.35. We'll see if that can be tested and then possibly even break lower to the downside. Interesting that when the conflict started, 156 was the level that the US yen pair was sitting at. So we looked at the fundamentals of strong US dollar, which we've got right now, and what's making it strong. Could it reverse? What would it take to reverse the US dollar? One thing I want to add as well is to watch out for the 2-year yields. The 2-year yields on indication of the US dollar strength, and sitting right now at last time at 3.86. If that continues to drop lower and move further away from that 4%, 3.9 to 4% where it was sitting, now 3.8%. If it comes lower than that, more in line with 3.5 or lower, certainly a strong indication of US dollar weakening. That's what we can look for. Let's remain technical traders. We'll trade on what we see, good trading, and keep that discipline.